When we think about banking today, we picture ATMs, online transfers, or even just tapping a card. But imagine going back 2000 years. What would you do with your money? How would you buy land? How would you pay soldiers or send money all the way across the empire? The Romans actually had answers to all of these, and what's surprising is that their system feels shockingly modern. They built both public and private banks, they created systems of credit and debit, they exchanged currencies, and even moved money across long distances without shipping piles of coins. But just like our banks today, Roman finance came with risks, with debt crises, and even full-on economic collapse. So, let's dive into the fascinating world of ancient Roman banking, a part of history that shaped the everyday lives of ordinary Romans, far more than the distant wars or the politics of the upper classes. At first, Rome didn't even need banks. People bartered, trading eggs for bread or tools for grain. But by the 4th century BC, Rome began using coins, which made trade easier. Suddenly, people needed safe places to store money. Where did they put it? Temples? Temples already had guards, priests, and treasuries, so people trusted them. And over time, temples became the first proto-banks, keeping records, exchanging currencies, and even offering loans. By 352 BC, Rome faced a debt crisis. Many poor citizens were drowning in loans, even risking their freedom. To solve this, the Senate created a commission called the Quinqueviri Mensari. These officials ran public banks, gave out loans at fair rates, and even accepted land or cattle as repayment. This was one of the very first examples of the state stepping in to prevent an economic collapse, something governments still do, even today. Soon after, private bankers known as the argentarii appeared. At first, they were just money changers in the forum, helping people swap between gold, silver, bronze, and even foreign coins. But quickly, they expanded. They began offering deposits, loans, and even transfer services across cities. Think of them as the ancient version of commercial banks. By the late Republic, these bankers were running permanent shops called tabernae argentariae, handling accounts, contracts, and credit, much like our banks do today. But the argentarii were more than simple bankers. They became the heartbeat of Roman marketplaces. Merchants relied on them to finance trade deals, and buyers at auctions often used their accounts instead of carrying bags of coins. Their presence in the forum was so important that no major economic activity happened without them. If a dispute arose, their records, carefully written in ledgers, could settle arguments faster than any witness. In some cases, a banker's notebook carried as much weight as a legal document in court. They also acted as trusted intermediaries. Imagine a merchant in Gaul who needed to pay for goods in Rome. Instead of transporting heavy, risky shipments of silver, he could simply deposit money with a local banker and have a note sent to Rome where his partner could collect the funds. It was safe, efficient, and surprisingly modern. And the bankers themselves? They weren't faceless institutions. Many were individuals with reputations to protect. A reliable Argentarius could gain lifelong clients, while one mistake or a single act of fraud could ruin his career overnight. So, while they may have started as coin changers, the Argentarii evolved into some of the most influential figures in Roman daily life. They weren't just handling money, they were holding together the threads of commerce, trust, and even justice in the empire. For poor Romans, banking often meant pawning possessions as collateral under arrangements called fiducia. Desperate people would hand over clothes, tools, or even enslave persons as security for loans. Farmers with land could borrow money for seeds or tools. Middle-class Romans sometimes had accounts with the argentarii, letting them pay at auctions, finance construction, or even transfer money across provinces. And here's the clever part. Soldiers could send their pay home. Instead of shipping heavy coins, a soldier in Britannia could visit a banker who'd write to another banker in Rome. Then the family could withdraw the money locally. That was ancient wire transfer, no treasure ships needed. The rich, of course, had access to everything: inheritance management, marriage contracts, wills, and large-scale credit. Written contracts and promissory notes became essential. In fact, bankers' ledgers were sometimes used as legal proof, even in court. Now, technically, senators weren't allowed to run businesses, but many still found ways to get involved in lending money. They financed cities, provinces, even foreign kings, using loans as political weapons. Take Brutus, for example. He once lent money at high interest, and when the city couldn't pay, his agents actually blockaded the council chambers until repayment was made. But Brutus wasn't unique. Many Roman elites used finance to strengthen their power. A wealthy man might loan money to a provincial governor, knowing he could later call in that favor for support. Money became an invisible weapon, shaping alliances, decisions, and even wars. For the wealthy, banking was also a way to secure legacy. Fathers passed down not just land, but portfolios of debts and contracts. Some families preserved power across generations through lending, not conquest. And while senators couldn't openly run businesses, their relatives or freedmen often did. This loophole let the elite profit while appearing to follow tradition. The sums involved were massive. Loans to kings or provinces could equal the revenue of entire regions. A single contract might decide whether a city paid soldiers, built walls, or avoided revolt. So for the wealthy, banking wasn't just account keeping, it was about control, economic, political, and social, power through money, without ever lifting a sword. For centuries, Roman banking worked surprisingly well, but as the empire weakened, mismanagement, inflation, and constant wars began to destabilize the economy. By the 3rd century AD, many banking institutions collapsed, money lending returned to being local and mostly informal. In the Eastern Empire, however, banking managed to survive. It lived on within the state and the church, laying the foundation for medieval and later European banking systems. But the legacy of Roman banking didn't just vanish with the fall of the West, its influence lingered, quietly shaping how people thought about money, credit, and trust. The Romans had already proven that an economy could not function on coins alone. You needed systems of record keeping, of lending, and of secure storage, and those ideas resurfaced again and again long after the empire itself was gone. When medieval merchants began experimenting with letters of credit, or when city-states like Venice and Florence built powerful banking families, they were in many ways reviving principles the Romans had tested centuries earlier. So even though Rome's financial network crumbled, its blueprint survived, and every time we sign a contract, take out a loan, or transfer money across distances, we're still echoing the same innovations first pioneered in the ancient Roman world. So, while we take our cashless transactions and bank apps for granted today, the Romans had already figured out many of the same concepts: currency exchange, loans, accounts, and credit systems over 2,000 years ago. For everyday Romans, banking wasn't some abstract idea. It shaped how they bought food, built homes, supported families, and even survived financial crises. And just like today, it was a system built on trust, opportunity, and risk. If you enjoyed this dive into history, don't forget to like the video and subscribe for more fascinating stories from the past.